the difference between leasing a car versus a finance when they watched the last video that I did about the XT5 and how I said that I was definitely going to lease it. So as you know, I bought my mother an SRX Cadillac, and now her lease is coming to an end. So at this point, we're looking at an XT5 because obviously the SRX can't be sold brand new anymore. It can only be sold as an older used or certified pre-owned car of some type. So the people are asking, what is the difference between a lease and a finance? And I'm going to explain it to you as thoroughly as possible using my iPad. And on top of that, I'm going to take you back and walk you through how to calculate a loan based on the loan terms and obligations and whatnot. So first of all, some people might say, oh yeah, well if you lease a car, you don't own it. Well, the reality of the situation is you don't actually own a car or a house until the balance on your bill is zero. Nobody can say that what I'm saying is not a fact because that's an absolute fact. The bank owns your house whether you lease or finance. Whether you lease or finance, you have some type of monthly obligation that has to be paid to the bank who holds the lien on your property. It doesn't matter whether it's a car, it doesn't matter if it's a house. They hold the deed, the title, whatever. The simple fact of the matter is they own it. When you finish paying it off, it hits a zero balance, and once it hits that zero balance, it's yours. You still, of course, have to pay taxes on that. So if you have a house, you have to pay property taxes. If you have a car, obviously, just to drive it, you're going to have to pay the city, not a tax, but you're going to have to pay them fees in order to keep that car legal to drive. So that means you're going to have to pay registration fees, you're going to have to pay inspection fees, basically whatever they tell you you're going to have to pay. So here you're seeing what they just sent me an email. I just got this email a little while ago, and this says that leases are starting at $299 on the new Cadillac XT5, 2018. So they obviously, when you go into these dealerships, they don't want you buying a 2017. They don't want you trying to get an old 2016 that they didn't sell. What they want to do is they want to put you into the brand new vehicle because the specials or loan terms that they have on those vehicles are usually better. The XT5, by the way, before I start talking, the XT5 is a crossover which slots technically between the CTS sedan and the Cadillac XTS. Now, if you remember the older videos I did, I wanted an XTS, but my mother wanted an SRX because she felt she needed more space and she wasn't crazy about the car itself. Now, she was coming out of a Cadillac STS. It's hard for me to pronounce these fucking words because it's all a bunch of letters and they really need to change that. So anyway, they have the ATS, the XT5, the CT6, the XTS, the Escalade, right? So basically, here's how it works. As you can see, they're saying $299 for the XT5, $286 for ATS, CTS is $399. So the CTS is $100 more than the XT5. Now, some people might say, yeah, well, it's better to get the car because it drives better. But the reason why that's so is because obviously there's a lower center of gravity and the sport steering is tuned better for handling and this, that, and other. It doesn't sit up as high, so it obviously has a lower center of gravity. Then there's also the CT6, which is a long wheelbase sedan with a lower center of gravity too. And, you know, they've been getting good reviews on it, despite the fact that they only offer regular twin-turbo V6 engines, or they offer a regular direct inject engine. Or if you get the CTS-V and you spend twice as much money, you get it for $100,000. And that's a sports car, which she absolutely isn't interested in. In fact, I took her to drive it at a Cadillac Experience, and she didn't even like it. She didn't like the seat bolster. I mean, she hated it. She didn't like the seat bolstering. She didn't like the fact that it didn't have all-wheel drive, didn't offer all-wheel drive. So I'm hoping that Cadillac does the smart thing and offers all-wheel drive in their cars. So what you see here is you see my multi-monitor setup. I'm running a Core i9 computer with a Titan XP. This is Cadillac's website right here. Here you got Dodge's website with the Demon. So I might say something about leasing a Demon, or leasing a Hellcat, or leasing a Durango SRT. And then I might say something about whether or not you want to lease a German car like the Mercedes-Benz anything, you know, like the S450, which is the only car I'd probably be interested in. So anyway, let me go to this. So here's this iPad right here. And there is an app which I have continuously talked about, and this app is an app you're going to want to download. Now, I'm going to leave the link to this app in this video's URL portion, because when I go on App Store, every time I type this app up, I can never find it. It never pops up right away. So I want to make it so that if you have an iPhone or iPad, that you'll be able to get straight to this app. It's called Loan You Later. So let me teach you how to calculate a loan. Now, you have to, let me remind you, I used to sell houses full time. I used to refinance houses, and that's the way I understand how to do this. So this way you understand where I'm coming from. So basically, all loans basically have four main parts. There's the loan amount, the number of months, the interest rate, APR, and the monthly payment. If you know any of the 3 out of 4, you can find out the 4th. So, loan amount, $50,000 car. Now, this calculator works regardless whether you're financing or leasing. And this calculator has served me well for the last 5 or 6 years, because you can also use it to calculate student loans. You can also use it to calculate home loans. You can use this to calculate virtually any loan, and especially once you understand how to use it. And I'm going to teach you how to use it. I'm going to teach you really quickly. So let's say your loan amount, let's say you want a car. Let's say, what's up here? Let's say there's what is it, Durango? Let's say you want a Durango SRT or something like that. So let's say that you want a Durango SRT. Let's see, shopping tools, locate new vehicle, search new inventory. And let's say that you want, okay, that's a Durango SXT. Let's say you want a Durango SRT. The SRT Durango, let's see. SRT Durango, let's see what the highest price is. Okay, $73,060. Now, sometimes they have deals on these cars, but let's say they didn't have a deal on this car. Let's calculate what it would cost to finance one of these things. So say there's no deal on it and they're just selling it to you straight like this. If they're selling it to you for $73,060, the number of months is obviously important, because here's the thing. The fewer the months of the loan, the higher your monthly payment is going to be, because that means you have less time to pay it off. So it's like if you borrow $1,000 and you pay somebody $100 a week, it's going to take obviously less time to pay this person back than if you borrow $1,000 and you're paying them $10 a week. Obviously, it's going to take 10 times longer. Now, if they're charging you an interest rate, then that's also going to increase the term of the loan. So let's say your number of months. Now, this is what's happening here in New York City, because I was talking about this on the SRT forum on Facebook that I'm a part of. What's happening here in New York City is because these cars are so expensive to insure, the dealers are making lots and lots of deals. Like, for instance, I took 2 pictures I'll show you later. They're trying to lease Charger Hellcats. They're trying to lease Challenger Hellcats for less than $800 a month with only $1,000 or $2,000 down. And the reason why is because the insurance on these cars is so ridiculously high here that they have no choice but to make a, a deal in order to sell the car. Otherwise, they can't move the car at all, and it just sits there on the lot. And I'm going to show you those pictures in a minute. So anyway, number of months. This is what they do. They stretch your number of months out as far as they can go, whatever the bank will take. Now, usually you have to have excellent credit to do this. And fortunately, I have excellent credit. So if you were to get one of these cars and they try to make it work for your pocket, what they'll try to do is they'll try to stretch it out to 96 months. That's 8 years. $73,000, 8 years, 96 months, interest rate. Now, this is a finance, mind you. Interest rate depends on your credit. So if you have excellent credit, you'll get a lower interest rate than if somebody has bad credit. If your interest rate, like let's say on that Cadillac ad was 2.9, let's say it's a 2.9. 2.9 interest rate, your monthly payment is going to be $853. So basically, when you add in the cost of your insurance, this Durango SRT all-wheel drive, that's $73,060, will cost you roughly $853 plus your insurance. So that'll probably cost you about $1,000 a month. And I think I've made no secret of it, but on my Jeep SRT, I pay $1,030 a month, and then I pay $260 of insurance. I don't mind telling you because it really doesn't matter. So whatever. That is what it would cost to finance this Durango SRT. Now, let's say you wanted to finance one of these Cadillacs. Now, based on the picture I just told you, one of those Cadillacs is going to cost you $54,000. $54,000, right? Now, here's the kicker. If you lease it, typically a lease is 36 months. Now, they set a 2.9% interest rate. That monthly payment would normally be $1,568 if you were financing it, right? Now, if you were financing $54,000 for 36 months at 2.9, it would cost you $1,568. Now, most people would say that's insane. I would never pay Cadillac. I would never pay them that kind of money for XT5. $299 a month for their lease, right? But here's the thing, and this is how this loan calculator works. Because they've already told you that it's going to cost $299 a month, what I do is I erase this part right here, and I have to type in 3 values out of the 4. So that means that I can work my way backwards to find the loan amount. And the loan amount that they're basically loaning you is their 36 months. It's going to basically cost close to $11,000, and you're paying them $299 a month. So after that 36 months, you take that car, you wrap that car up, you put everything back in it that's supposed to be in it, and then you hand Cadillac that car back. And now Cadillac takes that car, and then they certify pre-own it, and then they sell it to somebody else. And that's basically how it works. So let's say you wanted the CTS. They said the CTS was going to be, what, $399 a month at that 2.9 for 36 months, right? CTS is going to have a loan amount of $13,741. But here's the problem with a lease. Now, this is the lease that I'm working out. The problem with a lease is that they reduce the number of miles that you can possibly drive, because when they take that car back, they don't want it to have too many miles on it, because this way they can sell it as a certified pre-owned, and then they can say, oh yeah, well, there's not many miles on it, and the person who was in it only, they just drove it, they didn't smoke, so they weren't smokers. So they want to take that car back with as high a residual value as possible. And if they take it back with a high residual value, it makes it easier for them to sell it. But basically, that is what you're looking at. That is the difference between financing and leasing. The difference is, number one, with a lease, you're limited in the number of miles you can drive. With a lease, any negative equity at the end of that lease is basically canceled, because you're handing that dealership that car back. So at that point, it's no longer your problem. Now, the downside of the lease is, number one, you have less miles to drive. Now, my mom only does less than 10,000 miles a year, so she's fine with the lease. She could care less. She's fine. She drives less than she flies. When she goes someplace far away, she flies. So anyway, she doesn't have to worry about the mileage restrictions. But a lot of people do have to worry about mileage restrictions, and that's why they're not interested in leasing a car. And I totally understand that. Now, what leasing does is it allows you to avoid negative equity, and I'll talk about negative equity in a little while. But the other problem with a lease is your insurance is typically higher. So a car that normally would have cost to finance, a car that normally would have cost like $260 or something per month might cost you as high as $350, because the problem is it's a lease. When the dealership takes that car back, they expect it to be in perfect working order. So God forbid you get into a car accident, the onus is on them to actually repair that car and make sure that car is 100% working order. So what I do like about leasing is that it gives you a chance to have a car that you never could have afforded otherwise. And it also gives you a way to avoid the negative equity of a car. And I'll talk about negative equity in a second. So I just wanted to say that right there. A couple of photos I took when I was at Chrysler. And on the window, this is the lease deal that they were offering. They had a black Charger SRT Hellcat. And this was a Garden City Chrysler, in case you're interested, because some of you might see this and be interested. But you have to have excellent credit. If you don't have excellent credit, you're wasting your time. They want $779 a month times 39 months. And they only ask you for $1,000 down plus tax, plus tags, and the bank fees. Now, if this is $1,000 down plus tax, I'm assuming that the tax is about $3,500. So let's say you could walk out the door with this car for $4,000 a month. Let's say all of this stuff right here added up is $4,000. I could say $5,000. It really doesn't matter. But let's say it's $5,000, all of this added up. They want $779 a month times 39 months. So, if I go back to my loan calculator right here, well, first of all, we know the price of a loaded Charger Hellcat. We know the price of these things. These things are about $72,000, especially with a moonroof, right? Now, let's say I wanted to finance that for 39 months. And let's say that I had great credit and my interest rate was at 2.9%. I'll just leave it at 2.9 because that's typically what you'll get if you have good credit. Now, if you go to some dealerships, especially some of the German ones that have their own banks, the German banks, sometimes they'll give you a 1% or 1.9. But I'll just leave it at 2.9. Your monthly payment would be $1,936 a month to finance this Hellcat at $72,000, right? So $1,936 is what it would cost you every single month. You'd have to be coming up with close to $2,000, and that's before your insurance. Before your insurance. But their lease deal, now they're saying that the monthly payment is $779, 39 months, and I'm going to leave everything else the same. So what loan amount are we looking at? They're leasing you this half of that car's lifespan, $28,000. So basically, it comes out to somewhere around $30,000 because you figure it's $28,959, so you can round up. But basically, they're basically costing you about $30,000 worth of loan in order to lease this car at a monthly payment of $779. Hopefully you understand how that works. And I'm telling you this because I want you to download Loan You Later right now. When you see my URL link, I want you to download this because I expect everybody to have this. I expect everybody to have this app because otherwise it's hard to talk to me if we're not talking about money. So anyway, they also had this white Challenger Hellcat right here. This is the Challenger Hellcat, and it's a wide booty. You see that? It's got the wide booty kit on it. Now this is $889, and the reason why is because a Challenger wide booty is $77,000 a month by its sticker. Typically it's $77,000. I haven't seen them much higher than that. So they're saying $2,999 down, which is the reason why I said, yeah, we could factor in about $3,000 to $5,000, right? So the wide booty that they're looking for, let's look at this wide booty. If your loan amount, I'll just turn this music down just a little bit. If this loan amount is $77,000, now obviously there's taxes going into that, so you'd probably be at about $80,000. But that's the reason why they want so much down. They want $3,000 down so that they can reduce the amount of the loan amount. 36 months, they're saying. So they said 36 months. 2.9%. Your monthly payment on that wide booty would be $2,235. But this is not a finance, this is a lease. So because this is a lease, you would be paying, and I have to erase this one, if you're paying, they said $889, your loan amount would be $30,615. So this is what's happening. Chrysler is trying to reduce the cost of the Hellcat because they know you're going to get screwed on your insurance costs. So what they're doing is they're dropping that price down to a $31,000 or $32,000 loan amount in order to lease this car to you, because they're giving you about half the car, basically. They're giving you half the car's lifespan. Instead of a 6-year lifespan, they're giving you 3 years. And all you're putting down is $3,000, and you're coming out to that $889. That's how they're getting you there. I hope everybody understands this. Now, one thing I should say, let's go back to that $77,000. Let's say it's $77,000, but I know it's going to be more. It's going to be like $80,000 because you got to factor in taxes. They wouldn't be leasing you this car for anything more than about 36 months. So in order to make, instead of you paying, now normally you'd be paying $2,235 for 36 months, but no. what they're doing is they're going to stretch that payment out to 96 months. So even if we leave the interest rate the same, your monthly payment comes out to $899. If this $77,000 is stretched out to 96 months and you have an interest rate of 2.9. Most people, when it comes to a finance, they might end up with a larger interest rate. And I'm not going to change the interest rate because the problem is that's highly subjective. If you have excellent credit, your interest rate could be even lower than what I've shown you. If you have a credit union, your interest rate could be even lower than what I've shown you. So I can't really easily game what the interest rate is going to be because that depends on your bank. Capital One, MCU, Bethpage, Federal Credit Union, some of these banks actually will stretch these payments out to 144 months. That's 12 years. Now, I don't know, besides buying a demon, if you were buying a demon, let's say you bought a demon at $100,000, right? Let's say you could somehow find yourself a demon right now and it was only $100,000. If they stretch that number of months out to 144 months, your monthly payment on the demon, would be $823 if you had an interest rate of 2.9. You could get yourself a demon for $823. Now, the reason why I would say the demon is the better choice, obviously, is because the demon is reduced to 3,300 units. So the demon is always going to be a collector's car. Now, the more, if you use that damn thing as a daily driver, obviously it's going to lose a lot of its value. The problem is that car is only limited to 3,300 cars. So that means that it's always going to have a relatively higher residual value than just about anything else in the Chrysler Fiat lineup. So I hope this makes sense to you. Sorry, I'm having hiccups. Now, furthermore, some of you might ask, well, how do you calculate the loan on, say, a Jeep Trac? So let's say the Jeep Trac is about the same price as this demon here. Most of these dealers, especially Chrysler, they don't go up to 144 months. Most of them, if you have access to a credit union, they'll do your 96 months. And if they do 96 months, your monthly payment is about $1,168. Now, that's assuming that your entire loan amount is $100,000. If your loan amount goes higher than that, well, let's say it was $105,000. Let's say you bought everything in this damn thing, or let's say they tried to charge you an overcharge, and let's say we kept everything else the same except the monthly payment. The monthly payment would be $1,226. So hopefully you understand how this works. Like, for instance, you see the Mercedes shopping tools. Let's see Mercedes shopping tools. Let's see if I view the inventory of a local Mercedes. If I view the inventory of a local Mercedes using Manhattan zip code, find dealer, Mercedes-Benz, let's say Mercedes-Benz AMG dealer, and I say, yes, well, I'm looking for an S450 4MATIC, because, I really don't want to have to spend so much money in gas. So an S450 costs a slightly less than the Jeep Trac is trying to be sold for. But most of these dealers, let me tell you something, most of these dealers, those things, the people who bought it initially, they paid the most. Some of them paid overcharges. As you know me, I'm a cheap ass. I refuse to pay overcharges. Like, some people are like, oh yeah, well, why don't you just order it from the factory? Because I'm not paying them $5,000 or I'm not paying them $10,000. I've made enough videos to show you how in New York City they try to overcharge for shit. I'm not fucking paying them that. And I'll get it when I get it. And I have prospects easily coming in, and they should be here around tax season or whatever, which is February. But I'm not really worried about it. But let's say if I wanted to get an S450 4MATIC. Now, these things slot about $93,000 up to $99,000. But one of these S-classes, Mercedes-Benz, typically has a lease deal on these things. Typically, they give you a lease deal. Like, they'll actually tell you that, oh yeah, well, we're leasing Mercedes-Benzes for such and such and such. But pretty much this is exactly what you're looking at. Now, Mercedes, I haven't really seen them lease for 96 months. Usually they're more like 72 or 78 months or something. So let's say that you wanted that $100,000 car or whatever, or let's say it cost you $105,000. And let's say you're getting it for 76 months at this exact same interest rate. Your payments go up to $1,514. And I know that's true because the last S-Class we had was costing us about $1,500. It was a little less than $1,514. So basically, I hope that thus far you understand what I've done here. So what I'm asking you to do, and honestly, I get no money out of hyping this guy. Whoever built this app right here, I just want him to know if he ever sees this. I love this guy. I love this app. He's done a fantastic job with this app. He hasn't really updated it much. Like, they never made it so that it'll fit the 4K screen of the iPhone X. But I have to say, I absolutely love this app. It's a fantastic app. It served me so well. Like, for instance, let's say you have a student loan, for instance, or I could say a house. Let's say you have a student loan that's, let's say you have a $60,000 student loan right now, and you don't know how long it's going to take you to pay off. And let's say the government is screwing you and they're charging you a 6% interest. And let's say your student loan is like every month you're paying, let's say right now you can't afford to pay much more than, let's say, $200. That means it's going to take, the problem is it can't calculate that. And the reason why is because it's such a low payment that it thinks there's something wrong. So let's say I increase this to one, let's say you're paying $1,000 a month. Now it's saying it's going to take you 72 months to pay it off. So if you have a $60,000 student loan, it's going to take you 72 months to pay it off at $1,000 a month. And the reason why I couldn't calculate it before, like if I type, let's say if I type $200 a month. The reason why I can't calculate that is because you're not paying into the principal of the loan. You're ending up paying mostly interest. So what does that mean? Well, let's go back to my thought about, let's say, $100,000 car. If you're paying a $100,000 car at, say, a 2.9% interest rate, and your monthly payment on that car is $1,500, right? It says that it's going to take you 73 months. It's going to take 73 months to pay off. So then you get to this button right here, which talks about amortization. What amortization tells you is on a monthly basis, how much principal and how much interest have you paid. So back when we had that financial crisis, there were a lot of idiots who said, yeah, I'm going to take my house on a 1% interest. And it was an APR. It was a teaser rate. They got into the house, and then the interest rate skyrocketed. Normally, people who buy a house get a 30-year fixed loan. And that means for 30 years, you're paying the exact same mortgage cost, right? Plus your taxes, plus your insurance for the house. So what it is that this shows you the principal, which is the loan amount, basically. So if you took that $100,000, the principal is the $100,000. Now, the interest is what the bank has added on as a fee for borrowing money for them, and that interest increases the amount that it's going to cost you to own over a long time. So over these months, this right here, which says number, this is your number of months. So during my first month's payment, I've brought that $100,000 down with my payment to $98,000. And what happened was, out of my $1,500, $1,258 went to paying the principal, but $241 went to paying the interest. So that means that out of every monthly payment, $241 is going to the interest. And that's how the amortization table works. So if we fast forward, let's say to 50 months in, I've been paying it 50 months. I've dropped my $100,000 down to $33,000. Now the interest rate has decreased. $83 now is my interest, and most of my money is going towards the principal. This is one of the reasons why they tell you if you want to pay off a loan faster, you have to double up on your payments. So instead of paying $1,500, pay $2,000. Not a lot of people can afford to do that. But by the end of this loan, once I've made my final payment on this Mercedes S-Class, my last payment went $1,170 into the principal, $2.83 into the interest. Now, here's the kicker, though. I borrowed from the bank $100,000, but the total amount of interest I paid over those 73 months was $9,172. So that means that the total amount that S-Class cost me, just talking about the cost of the car, not the insurance and not the gas and anything like that, the total amount that car would cost is $109,000. But this is assuming that you have low credit, because if you have a very good credit score, you're getting that 2.9. But what happens if you have a shitty credit score? What happens if you can only apply and you can only get a 5%? If you get a 5%, it's going to cost your ass more to own that car than me. Now, granted, it went up from 1,500 to 91. It went up to 1,591. But look what happened to your interest. The total amount of interest you paid because you had shitty credit and couldn't get that 2.9, you got that 5. The total amount of interest that you're going to pay is $16,000, wherein it only cost me $9,000 because I had excellent credit. The total amount you're going to pay is $1,116, but because I had excellent credit, because I had the 2.9, it's going to cost me $109,200. So do you understand how this app works? Basically, if there's any questions or comments or anything about this video, feel free to email me because I love this app and I love explaining it. I love trying to put people onto this app. It was 100% free. I'm not selling anything here. This app is free. You know me, I'm cheap. I do shit cheap. As far as I'm concerned, you buy low, you sell high. That's the rule. What I do is talk about depreciation. I want to talk a little bit about depreciation, and I know I'm going to piss some people off because they don't like thinking about how badly they got fucked on their loans. You know, I'm going to talk about depreciation, but the issue is depreciation basically means, are you underwater on your loan? Oh, I see Tall Guy. He just made a review. He's doing the same thing I'm doing about did I lease or finance my Jeep Trac. Oh, so he's doing the same thing I'm doing. In fact, let me visit his video so that I can like it and say first. So I'm gonna be the first person. Oh fuck, this is taking too long. Oh shit, I'm not first. I'm 362. All right, well I'll come back to that. So anyway, he's doing the same thing I'm doing because he's working the same type of numbers. So anyway, let's say you buy a Dodge Challenger Hellcat. You know that the Challenger Hellcat costs about $70,000, right? So what do you notice lately? What you'll notice is that there's a lot of these cars being sold in the $50,000 range, but they don't have very many miles on. Let's say at less than 1,000 miles. Let's see how much the cost is for a Challenger Hellcat with less than 1,000 miles. Well, looky here. They want $59,000, $60,000. So this thing lost $10,000 out of its value. Let's say it was $70,000 when it was bought. This thing lost within 1,000 miles. This thing lost $10,000, and these people want $59,000 for it. With less than 1,000 miles, they want 50 for this one right here, a flat out 50. With less than 1,000 miles, 56, 59, 59, 62, 63, 63. So with less than 1,000 miles, these things lose about $10,000 of value. How about this one right here? This one is a Challenger SRT 392. I don't want to look at that one because that one doesn't have as high a cost as the Challenger Hellcat. But look at this one. This one is a regular old model. This does not have the wide booty kit. And because it doesn't have the wide booty kit, it didn't cost $77,000. So that means if it was about $70,000, it must have set on the lot. It probably doesn't have any miles on it. Or maybe it has a very few miles on it, but we could find that out. You can look at this yourself, but what I'm talking about is depreciation. So with depreciation, it says mileage 0. That's the reason why it's so close to $70,000. So this one is a 2017 that did not sell. That's what it is. The dealership obviously wants to sell this. It has 0 miles. The dealership wants to sell it. And because the dealership wants to sell it, they have no choice but to decrease the price. Because the other issue is that these cars come with a warranty that's only 3 years, 36,000 miles. So here's the issue. Let's say you go in there and say, oh, this is beautiful. I want this one specifically. I like the color. I want this one right here. You're going to pay $69,000 for it unless they negotiate. But on top of that, you have to pay the taxes for it. Now, here's the issue. You'd be a fool to buy one of these cars without a warranty. So therefore, now you got to buy the Mopar warranty. The Mopar warranty adds another $2,800 to your purchase. So that means that you're paying $70,000 at least. $70,000 plus $2,800 and plus whatever dealer fees they got. So you're basically coming out to about $73,000 on this. With all of these used Hellcats that have popped up on the market, you'd be a fool to try to buy one of these things without the Mopar warranty. So no matter what price you see here, add $2,800 to $1,000, or I would say add $3,000 just to be safe. But no matter what price you see, add $3,000 to it. So that's $64,000, add $3,000 to that. This is a 2015, so you already know this is probably off warranty. A lot of people who bought Hellcats in the very beginning, they were told that these things, this has 83 miles, mind you. A lot of people were told that these cars were limited edition, and then they found out that they weren't. Dealers were selling these things to people just like me who went in and financed one for $1,000 a month. And then they started leasing them like they did here for $889 a month for 36 months with 10,000 miles per month that you're allowed to drive. So the thing about it is, because these people realized that they lost $10,000 within the first 1,000 miles, a lot of people tried to sell their Challenger and their Charger Hellcats on the market for as much as they could possibly get. Problem is, now their values are in the 50s. God forbid they got into any accidents or had any badness on their Carfax, their values are even lower. Their values are low 50s, possibly high 40s. And that's basically how it works. So I hope you've learned a little bit from me, because I always try to give the best financial advice that I can. And the financial advice that, it's this loan calculator is fantastic. It works the exact same way if you're looking to buy a house, if you're looking to use a student loan, if you're looking to take out a personal loan. Please download this loan calculator. And if you download this loan calculator, please leave me a comment in my comment section that says, "Thanks, Big Truck Series, I downloaded the loan calculator. I want you to test it. I want you to use it. I want you to love it. I want you to keep it with you. I want you to share it with other people. I've used other loan calculators. This is the best loan calculator that I've seen." So thank you very much, and I hope you liked this video. And if you're not a subscriber, I hope that you learned something. I hope you subscribe.